Hi, I'm Klaus Andersen. Today is the 18th of October, it's Thursday. Just taking a quick look at what I thought was the trade of the day. This was the open of the DAX on the 5-minute index here. There was a nice trade on the open as well. A big rally into the resistance area here from previously. It served as resistance late yesterday and also in the open here, and then support here. So that's a valid resistance line. You got the rally up to here, a retest, another retest, a small sell-off, and then price attempted to break out this resistance area again. It failed lower than the open low. So this was a nice open rally, a nice always in long market here, and then as we failed to break higher here, it became more a trading range price action than always in long. So I like to take this short right here. I'm just gonna zoom in so I can show it a bit better. Get this out of the way right here. It's a double top, this high and that high. You could also count this as a triple top, this high, and that high, and that high in there counts as well. Either way, it's a major resistance area, and it is a lower high compared to that high as well. So failed to break above this high, and it is at a resistance area and what I thought could be a trading range for the day. Also, the signal bar, you could count this as the signal bar, the bull bar that closed near the low. I like to wait, then you get this strong bear signal bar right here closing on the low. That's a nice signal bar, and the bar following also closed near the low. You would be better off if you got some follow through right off the bat, like this bar right here. But since it is off the resistance, bar counting is not always as accurate as it is in the trends. As you only get this low right here, then you get a first entry short, and then you get a second entry short up here. That's technically the second entry, and then the third entry short up here. But you see that's one leg, and these two smaller legs comprised becomes one leg up here. So that's the first push up, first entry short, second entry short. So that's more accurate bar counting here. You have a push down, that's the first entry short, pull back, the second entry short here. So bar counting and the waves are more accurate when you're not ranging like in here. But either way, your stop goes above the high of the day up here, and first target, these lows down here. So that's if you go short below that bar right there, that's a 30-point stop and about a 30-point target. And the next target area is down at these lows down here, and that's a 100-point stop, a 100-point target for the second target. You could also say the high right here and that low, so 100% expansion of this upper range right here. That takes price down to 11,673, which is where we got a bounce. So obviously someone was taking profits at that level right there. Also, you have the major support right below. See how strong we broke through and got a larger pullback, and then we got another sell-off. So if you just manage to keep your stop above this high, and as you move down to the first target, you could have moved it to break even, and when you move down there, you could have put it well above that high or above this high right here. That would have kept you in the trade. Often you get a pullback to test this prior support area. Now it becomes resistance area with this test right here. So just put a couple points higher, and then there's a chance that you get a move like this down. If you kept it all the way into the close, assuming that we have the close about, get this out of the way, you have the close about here. That I'm just gonna do. That's the close up there. Let's get the measurements in. Right there, up to there. That would have been 176 points. So pretty good day for your runs. And if you kept moving your stop down, then your stop would be around well, perhaps 580 right now, and you'd be risking from here about 50 points. So, well, either way, that's what I thought was the trade of the day. Well, cons for what is against this trade right here? Well, you could wait for a lower high, comes down here, and take the setup down there. That's one way to give it a bit more probability, but also takes away some of the potential gains. Also, it is a first entry. First entry, you could, if you micro count this right here, there is a first entry there, and on this bar right here, price pulls back, and then a second entry. But technically, on the 5-minute chart, that's still the first entry. But that's, it's not a proper second entry. You could wait for that, and that's also this one. And that's what you get down here. It's the first entry short, and that's a pullback, and that's the second entry short down here, and then off we go. And you have the strong rally on the open. Often when you rally into a range, you're gonna rally out of the range. If you sell off into a range, then like we did here and the range, and then you're gonna sell off out of the range, and then you get a pullback to test support on the range right here before we sell off again. But yeah, that's against the traders one. But zoom out a bit, and you see the context is we're trading sideways, and it's a resistance area. So trading range at the resistance area, you need to sell high and you need to buy low. And as we're in the highs, you need to look for a short. That's going to be what we discussed today. I'm Klaus Andersen, and you guys have a nice trading week.